Hi everyone, today we're going to look at legal entities and tax structures and how they relate to each other. To start off, we need to define some words and terms that we will use throughout the rest of this video. The first two are legal entity and tax structure. While we often use these terms interchangeably, they actually are quite distinct and different. Let's look at legal entity first. A legal entity is a business or operation. Often this involves filing the proper forms and taking the required steps with the state government, usually the Department of Commerce or Secretary of State, but it depends on the state. The state then grants the founders an entity so they can legally do business in that state and so that the state can collect taxes. Here are some legal entities that most states offer. There is the corporation, professional corporation, limited liability company or LLC, limited liability partnership or LLP, and also the fictitious name or doing business as name for the sole proprietors. Now let's look at tax structure. A tax structure is a tax classification given to you or your business by the IRS. This classification determines how your business is taxed. Each classification has different qualities and the taxes under each can vary a lot. Some examples of tax structures offered by the IRS are disregarded entity, partnership, S corporation, and C corporation. You may have noticed that there is some overlapping names between the two, which can lead to some confusion. So to help you see how each relates to the other, here's a chart of some of the most common business legal entities and tax structures. A limited liability company or an LLC is one of the most common legal entities, and it can be taxed as either a disregarded entity, partnership, S corporation, or C corporation. Which brings us to another very common legal entity, a corporation, and it can be either taxed as an S corporation or a C corporation. Let's go through some examples to show the various combinations. Meet Adam. Adam started a lawn mowing business and filed the proper forms with the state or hired a professional and set up an LLC called Adam's Lawn Mowing LLC. Adam is the only owner of this company. Because he is the sole owner, the IRS by default will automatically make his business a disregarded entity as the tax structure. He can change this tax structure to a partnership, an S corp, or a C corp if he wants to by filling out a form and sending it to the IRS. Some states require that you convert your LLC to an S corp or C corp when you change your tax structure and add Inc. or Corp and drop the LLC from your name. Now let's look at this same situation, but this time Adam and his friend Doug are going to own the business 50-50. They set up their operation as an LLC with the state. However, the default tax structure from the IRS is a partnership, but again, they can decide to change their tax structure to either an S corp or a C corp. We should note here that the only legal entities that have a tax structure of disregarded entity are sole proprietors and single member LLCs. It's also worth noting that the sole proprietorships can only be disregarded entities. Let's look at another example. Meet Mary. Mary decides to start a flower shop. She starts a corporation by filing forms with the state or hiring a professional to do it. She calls her company Mary's Flowers Corp, and she is the only owner. Corporations can only elect to be taxed as S corps or C corps. By default, corporations are taxed as C corporations. Even if Mary had a partner or co-founder, the options are the same. A corporation cannot elect partnership or disregarded entity for the tax structure. Side note here, when you set up a legal entity as a corporation, you cannot use LLC behind the name, but you can use Corp, Corporation, Inc., Company. Some states allow their designations, but generally those are it. Let's look at another example. Meet Derek. Derek decides to open a towing business. He registers a fictitious name or DBA with the state so he can use the name Derek's Towing and accept checks made out to that name. Derek did not set up a legal entity and he has no legal protections, just a name. Because Derek did not set up a legal entity, he does not have any choice for a tax structure. He is a disregarded entity and as a sole proprietorship will include all of his allowable business income and expenses on his Schedule C on his personal return. Now let's look at Derek's Towing again, but this time Derek and his friend Duke decide to start the business. They register a fictitious name or DBA with the state so they can use the name Derek's Towing and accept checks made out to the name. Derek and Duke have just formed a general partnership and did not set up any legal entity and no legal protections, just a name. Because Derek and Duke did not set up any legal entity, they do not have any choice for tax structure. They are a disregarded entity as individual sole proprietors, and each will include their apportioned allowable business income and expenses on their personal returns. Hopefully this gives you an idea of the various combinations available. If you have any further questions, please reach out to us here or at our website at www.coppercoinfinancial.com. Thanks and have a good day.